Data from the Central Bank of Nigeria shows that foreign exchange inflow into the country surged by 64% in the third quarter of 2021, thereby boosting liquidity. But will this serve to shift monetary and foreign exchange policy in 2022? We asked that question and posed that question to Dipo Ajayi, the head of fixed income and FX at Chapel Hill Denham. Dipo, Happy New Year to you and thank you so much for your time. So for those who are looking at the FX markets, will it be a happy new year? I think 12 months ago, there was that expectation that there will be more weakness for the Naira, and it did play out. I think many people had called that. What are your expectations moving into this year? Let's start with that.
Well, I think for me, if I had to go by what is currently happening globally in terms of the oil price, and when you look at the results of the FX generating capacity of the government for Q3 last year, you will tend to say that that will actually put the government in a better pedestal to actually be able to actually meet FX demand of people. However, and also if you look at the CBN governor's one of his comments after the MPC, I think is that the July MPC, when he was asked about the FX, he made a very prominent comment, and he said something like that they are waiting for the completion of Dangote refinery by June, and he said after the refinery have been completed, that they, as at that particular point in time, they will now float the currency. At that point, they were waiting for who will now make the Naira to depreciate at that particular point in time. So it will lend credence to the fact that the CBN governor is also on a waiting game for the Dangote refinery that's expected to come upstream this year. So it seems like the refinery is the bailer for the government on the FX crisis that we are currently in. And for me, if you look at this a pre-election year, so you don't expect more of FPIs coming into the market this year, because even pre-election year is a year where most of those people actually want to flee your country and actually start to sell down their assets and move their money out of the country. But just the good thing is that currently we don't have much of them in our books currently. So as a result of that, there won't be much pressure on the outflow of FX for us this year. But I don't think we'll be seeing much of those guys coming into our market for this year.
Interesting point. I was just going to get to that in terms of how the elections could impact the outlook for the currency. Obviously, the FPI flows is one, but then investment activities in general, which is linked to economic activity, could be another. And I just wanted to get your perspective on your expectations for the economy and how that potentially could impact the value of the currency.
Yeah, for me, this year is going to be, if you look at the budget, it tells you that the government actually want to do a lot in this year. And one of the reasons is that knowing fully well that this is more like the last year, a full year that the government will actually rule the country, and they actually want to actually leave a lot of projects completed. And as a result of that, we'll see a lot of cash flows into the economy, and which will likely actually spoil growth. And but on the flip side of it is the fact that most of the funds that they are releasing into the system will require FX. Because most of them will require the purchase of machineries, will require the payment of expatriates and all those things. What the end result of that, that's further put pressure on the CBN to actually meet the demand for FX needs. But the good side of it is for this year, we are not expecting any great shock for oil price, and analysts are already looking at oil will trade around $70 region for the year, considering that global growth, we are still expecting more countries to open up for production and also scale up their production. So as a result of that, that will mean that there will still continue to be demand for oil. And also on the other hand, the OPEC and OPEC Plus, they are not in any haste to actually open the tap as we speak. So it means that we might likely see the oil price at this attractive level for some time. So as a result of that will help us to actually cushion the effects of FX things. For me, I think that the government will just the CBN will just continue to manage FX throughout the year, pending when Dangote refinery will likely come up.
So, if that is your expectation, very quickly, if you can, in less than a minute, what is your expectation for monetary policy in terms of, would they perhaps hike at some point, or do you think that they're just going to stay the course?
Yeah. For me, I think for monetary policy, you guys, at the point this year, they will have to actually hike rates. The global economy is already hawkish, and we feel that will actually impact our markets also, because the emerging markets are not insulated for what is happening globally. Inflation is still on the rise globally, but we are just enjoying the base year effect. And even looking at the budget of the government, our target for this year is still 13%. So 13% is still double digits, which is not, which is outside the range, the target range of 5 to 9, predicted by the CBN. So I feel that at the point this year, the MPC will likely have to sit down and push rate up.
All right.